And we are live. We're live here in Washington, D.C. I have my brother here with me. He's back.
Yes, thank you. We are catching this amazing spring here in Washington, D.C. It's absolutely beautiful.
It's absolutely amazing. I mean, spring in D.C. is just beautiful, right? You get the flowers, and everything grows here. Things just grow very easily here.
Oh, yes. And I love being down in Palm Beach in the winter and up north in the summer. So we're doing it up.
That's right. He's a snowbird at heart, folks. Well, good morning, Money Mavens, and welcome to the Impact Money Show, broadcasting from Washington, D.C., where the cherry blossoms are gone, but the market chaos is in full bloom. It's a balmy 68 degrees out there with zero chance of rain, 50% humidity, and a 10-mile-an-hour breeze that's probably blowing dollar bills right out of your wallet.
This city will blow them right out of your wallet.
So grab your coffee, buckle up, and let's dive into the financial roller coaster that's got Wall Street, the crypto bros, and even your grandma's gold stash on edge. Folks, it's April 29th, 2025, and the markets are serving more drama than a reality TV reunion. We've got the Dow Jones doing a little victory lap, oil sliding faster than my uncle at a family barbecue. Gold taking a breather, silver flexing its industrial muscle, and crypto, well, let's just say Bitcoin's got more mood swings than a teenager on TikTok. She really just can't decide what it's doing.
Yes. Yes, the markets are temperamental, and they really are. They're dipping the markets, and then they're pumping it back up. It's quite a routine they got going.
The markets are emotional. Right? I mean, that's what I always tell people. Markets are emotional. Then you add in Trump's tariff tantrums. I know. Give me a break, okay? It's a show. Musk's Tesla troubles, a war in Ukraine that's got everyone on pins and needles, and of course, not even to mention Gaza and the massacre that's going on over there. Then you have the Bank of Japan playing chess with the yen, and you've got a recipe for financial soap opera. So let's break it down, keep it real, and maybe even sneak in a laugh or two before your portfolio gives you heartburn. First up, the Dow Jones Industrial Average is strutting its stuff up 169 points. That's almost 0.5%, closing at 40. It's not closing, it's currently at 40,397. It's like the Dow is saying, I got this. After a wild April that saw a 2,200-point tariff-induced faceplant. It was rough. It was rough. What's fueling the swagger? A flicker of hope in U.S.-China trade talks, courtesy of Treasury Secretary Scott Bessent, who's hinting at a deal where everyone from India to your local bodega, plus tech giants like NVIDIA and 3M are posting earnings that make Wall Street swoon. But hold the champagne, folks. Analysts are waving the red flag, citing the Dow's theory sell signal and forecast that could see this index tumble 13% to a low of 30,000s in 3 months. And what they're talking about, folks, is the death cross.
Yeah.
Which we all did see the death cross, folks.
Right.
Yes. So we have the death cross, and we also have the SOM rule. Matt Dixon beyond shortly, he might talk about the SOM rule. SOM rule has predicted, that's SAHM rule, has predicted every recession since they've been counting these recessions pretty much. And SOM rule says there's a recession coming.
So prepare yourself.
The VIX is chilling in the 20s, but it's still whispering. Don't get too comfy short term. We might see the Dow flirt with 41,000 if trade vibes stay rosy. But a trade war flare-up could send it crashing faster than my Wi-Fi during a Zoom call. So is this rally the real deal or just a sugar high before the crash diet? Stay tuned because our guest Matt Dixon from Ave will break it down with his Elliott way of wizardry. Now let's talk oil because crude oil is sliding faster than a politician dodging a tough question, down 2.14% to $60.72 a barrel, with Brent oil not far behind. What's got oil in a funk? Trump's tariff tirade. That's what. His April 2nd executive order slapped 10% tariffs on everything, and China fired back with 34% counterpunch, spooking markets into recession mode. The International Energy Agency slashed its 2025 demand forecast to measly 730,000 barrels a day, while OPEC is planning to pump an extra 411,000 barrels daily starting in May, because apparently they want to flood the market like it's Black Friday sale. Non-OPEC players like the U.S., Canada, Brazil are adding 1.2 million barrels a day, and China's demand is flatter than my attempt at a souffle. Hey, I can make a good souffle.
Have you ever made one?
No, but I'm sure I could. What is the souffle?
Those things over there in France.
I think that's what it is. Those things you order over there when you're in France. The result, a projected 1 million barrel a day surplus next year, with inventories piling up like my laundry. Remember the last Trump presidency, we had more oil than anybody would buy.
Reserves were full.
I had people calling me. They're like, Bruce, I have a tanker full of oil down in the Caribbean. You get the oil for free. Just help me offload it. Nobody wanted it. There was nothing you could do.
That's crazy.
It was crazy. So short term, of course, we could dip quite lower. And actually, Matt was saying that on the show yesterday, unless the Middle East flare up or surprise OPEC pause kicks in. Long term, looks like expect Brent around 65 to 70 and WTI at 60 to 65 a barrel. But if Trump's trade wars heats up, we might see oil cheaper than a gas station hot dog. Keep an eye on tomorrow's EIA inventory report. It's going to be a doozy. Switching gears to precious metals, gold's acting like it forgot its lines, down 0.99% to 33.14 an ounce after hitting a record of 34. It was really 3,500 on April 21st. It's now catching its breath thanks to a stronger U.S. dollar and a risk-on vibe that's got investors chasing stocks instead of safe havens. The DXY, the U.S. dollar, is up 0.16% to 99.17, making gold pricier for global buyers. And China's gold consumption is down 6% year over year because apparently even the jewelry shoppers are feeling the pinch. Technical analysis are eyeing a correction to 32.70 or even 33.116 if support cracks. But central banks are hoarding 70 tons a month of gold. So don't count gold out. If trade talks tank or Ukraine heats up, we could see gold strut back to $3,500 long term. It's on track for $3,436 by the end of the year, unless the dollar decides to flex harder than a bodybuilder at a beach party. Silver, on the other hand, is the cool kid at the metals party, up 0.7% at 33.56. Why the shine? Well, the industrial demand, baby. Thanks solar panels, electronics, and all that techie stuff. That's keeping the world spinning. With a gold to silver ratio of 98-1, silver's looking like a budget-friendly safe haven, and it's shrugging off the dollar gains like a pro. It's dancing near resistance at 33.70, and a breakout could send it to 34 to 35, especially if EVs and AI demand keeps soaring. But if equities keep rallying or oil slumps drag on, silver might trip to 32.66 by the year end. Expect 35 to 40 is what we're predicting, with some wild eye optimists even saying 70 to 150 by 2034 if supply shortages hit. So is silver the metal to be in, or will gold still the spotlight? Well, Matt Dixon still has charts coming up. Crypto is where things get spicy.
Right? The crypto markets are spicy.
It's spicy. Bitcoin's leading the pack at 94,805, up a modest 0.1% today, but 5% over the week. It's like Bitcoin saying, I'm still king, but I'm pacing myself.
Surely.
Ethereum's not far behind at 1815, up 1.26 today. I'll tell you what, Ethereum was the most shorted by the financial institutions. It was the most shorted crypto in the world for about a year. So wow. I don't know if that's over now, but if it is, we might see a big jump on Ethereum. Plus, you have the founder talking about updating the code and everything else. So we'll see what happens. Ripple's been winning again. XRP is at 2.27. Cross-quarter payment buzz. They keep the buzz going. SUI skyrocketed 48% in 7 days to 355. Talk about crypto Cinderella story. Solana's chilling at 147.17, up 0.83, while Dogecoin, the doggy coin's barking at 17 cents, almost 18 cents, up 0.2. Proving meme coins still have a bite. Stable coins like Tether and USDC are steady, of course, at 1, but well, that's their job, right?
Yes. Please keep doing your job.
Crypto markets were 2.7 trillion today, but here's the rub. Trump's tariffs and the hawkish Fed could cramp Bitcoin style, especially with the DXY creeping up. Short-term Bitcoin might test 100,000, but if institutional FOMO kicks in, but a trade war and a regulatory crackdown could knock it to 85. Ethereum's Zion 2000 and Sui's Wild Ride could hit $4 if the hype holds up. Long-term crypto is tied to risk appetite. If the Dow and the HSI keep climbing, so might Bitcoin. But if Ukraine or the tariff shock could send it diving. Always remember, folks, crypto is the Wild West. So don't bet your house on Shiba Inu.
Oh, yes. I can't believe Shiba holds those top spots. Go Shiba.
I mean, it really is something else. Speaking of the dollar, DXY's flexed at 99.17, up 0.16, thanks to Fed Chair Powell's no rate cuts for you. The central banking cartel of the United States, called the Federal Reserve, flexing. Trump's pushing lower rates, telling them, lower these rates.
Please.
And Powell's saying, no. Strong U.S. retail sales and a 2.7% GDP growth forecast are keeping the greenbacks cocky. But people warn that a bad GDP print could drop the DXY to 97. Short term, the DXY might hit 100, back to 100. I mean, I never saw it over 100, but since we've been doing the show for about a year and a half, it has been over 100. I think this is like the first time it's really been under 100 over this last month or so. Squeezing gold and oil, but a trade deal or Fed pivot could send it packing. Over in Japan, the US dollar, the Japanese yen, the US dollar is up on the Japanese yen, 1.7 to 142.25, riding the optimism and the juicy US-Japan yield gain. The yen's carry trade, 60 to 70% unwound already after Bank of Japan's July rate hike to 0.25%, with 20 billion in U.S. bonds sold last month. The BOJ is playing it cool, likely holding rates on Thursday, but a hawkish surprise could yank the U.S. dollar, Japanese yen to 140, boosting the yen and shaking the carry trades. Japanese banks are sweating with 2.2 trillion in unhedged bets, so expect fireworks if Governor Yuta gets spicy. Now, just to unwind the carry trade, everyone always talks about the carry trade. So what the carry trade is, and I know we talk about it on the show quite often, so I want to put it out there again for everybody. Investors will borrow money in Japanese yen because of the extremely low interest rate. So even right now, I think it's at a 0.25% interest rate. Well, in the US, we're at like 0.4% interest rate, right? So they borrow the Japanese yen at almost zero or sometimes even negative historically interest rates. And then they use that to invest in higher yield things. The Hong Kong Hang Seng sneaking up. It is a far cry from its April 7th bloodbath, where it went up 13%. It really has been a wild ride since Trump's been in. I guess we're at 100 days.
The 100-day marker, and he has surely stirred up the world.
Everybody is upset here in Washington, D.C., folks. I don't know anybody who's not upset. I did go shopping yesterday, and I have to admit, I was out of the country for about 10, 15 days. Prices are up.
Oh, yeah. You noticed.
Prices are up. About 10% overall. Prices were up. It was noticeable.
Damn.
Yeah, that is no joke. I say so. It's all kind of on China. China's stimulus is they pump the market like our bank does with all kinds of money, and they're playing it hard, and they're playing hardball with the tariffs as well. So we'll see how that plays out. Now let's get geopolitical, because the Ukraine war has got the market twitchier than a cat in a room full of Roombas. Russia's pounding Kiev with an April 24 strike, killing 12, and a drone attack today. Out 2 more. Putin's dangling a 72-hour ceasefire for May 8th, but Zelensky's not biting, demanding a 30-day truce. Trump's playing peacemaker, meeting Zelensky in Rome on April 26th. You guys all saw that there in the Vatican. Yeah. But his Crimea concession idea has Europe crying foul. Germany's Boris Pistorius called it capitulation. North Korea's troops are now fighting Russia in Kursk, which is like adding hot sauce to an already explosive stew. Markets are feeling the heat. Oil's down, partly because of these fears that, it could go worse. Of course, gold is the safe haven. We'll see how that all plays out. Trump's the elephant in the room, folks. His 10% tariffs on China and 34% counterstrike are crushing oil and the Hong Kong Stock Exchange, with WTI with the oil at 60.72 price, screaming recession vibes. His approval rating is sliding, according to a lot of these things. I mean, it's hard to say. And 70% of Americans are bracing for inflation. As I just mentioned, the prices have been going up at the food store. He's meddling in Canada's election, pushing to be the 51st state, which helped Mark Carney's Liberal win April 28th, but risked Canada's 4 million barrels of daily U.S. oil exports. Trump's peace deal in Ukraine and executive orders on mining and immigration are sideshows for his trade war, which could either crash oil to $55 or spark to $70 rebound if China deals. I mean, it's just kind of, who knows what's that going to happen. Keep your eyes on April. Well, April's almost over. So I don't know what that's all about. Elon Musk never want to stay quiet. Is juggling more balls than a circus clown. Tesla's profits tanked 71% in Q1, with deliveries down 13% because buyers are sour on Musk's Trump ties. Turns out people aren't really that fond of getting their EVs with a side of politics.
Yeah. It's funny that they catch these people on their Tesla cameras scratching their cars. Quite rude.
It's quite rude. He's cutting back on his Doge roll in May to save Tesla, which is down 50% from December peaks. His XAI is raising $20 billion, and Grok 3.5 beta dropped today. It's pretty awesome, I have to say, boosting silver's demand. Musk's zero tariff stance with Europe clashes with Trump's potentially lifting the HSI and the Dow if it gains traction. His wilder remarks, calling Social Security a Ponzi scheme and accusing Senator Kelly of treason, are tanking the Tesla brand, indirectly hurting oil via weaker EV demand. Expect Musk to keep stirring the pot, supporting silver, but dragging on oil unless Tesla rebounds. So what's the big picture? Markets are a tug of war between trade, hope, and tariff. The Dow and the HSI are riding optimism, but oil is drowning in oversupply and demand fears. Gold's playing defense, silver's got industrial swagger, and crypto's a high-stakes poker game. The dollar's king for now, but Japan's yen could steal the crown if the BOJ gets bold. Ukraine war keeps everyone guessing, and Trump's tariffs are the wild card. Nobody asked for it. Musk's antics add spice, but there's no match for the trade war bite tonight. We'll have to see how it all plays out. Coming up next, we have Matt Dixon diving into the charts with the Elliott wave, the Fibonacci, the works. Tell us if the Dow's rally is legit or if oil's headed off for a bargain bin. We'll also unpack crypto's wild ride. Before I wrap up our opening monologue here, I want to say it's great to have David back here.
Absolutely. Thank you for having me. I love this show, and I love the crypto space.
It's great to have him back on the show. We will be in Dubai as well next week, hitting it hard with the Global Family Office Investment Summit. We have Bitcoin Palooza coming up as well in Las Vegas.
Super pumped about Bitcoin Palooza.
It's going to be totally awesome. It's going to be a lot of fun. And it always, that's how we roll. Dubai is a lot of fun anyway. So that's going to be something else. At the end of the show, we have, of course, George Ferrato. He's going to join us he's going to join us for that. Now I have our good friend Matt Dixon sent me in his report because, of course, we are doing our show a little bit later than normal. So here is great Matt Dixon.
Morning, everybody. Good morning, Bruce, and good morning, Impact Money viewers. I wanted to start today with just looking at, again, it's really difficult at the moment. As we always say, the markets hate uncertainty. We clearly do have uncertainty at the moment. There is no doubt that, however you perceive it, Trump has changed his mind. He's backtracked over tariffs. He's talking about the tariffs won't change, won't go down. Even his supporters around him, Lutnick and co., they basically all were saying that these tariffs will stay in place. And then they said we're not prepared to talk. And then they said, oh, but it's all a strategy to get them to talk, etc. So they keep chopping and changing, and markets do not like this. The strategy isn't good. And actually, I think it's going to cause a lot of damage to the economy. This isn't being factored into the markets as yet. So I think most likely you're going to see shelves go empty in the US because a lot of these container ships, I understand container traffic from China to the US is down 25% at the moment, at least 25%. So there's going to be a lot less delivered. Now, you might think that's a good idea, but the US don't have the capacity to fill those gaps at all. And so there's going to be certainly some pain. And then we're talking about all the cuts with Doge. There's going to be massive cuts. The cuts that they've talked about, again, they're, to put it politely, they're not true. A lot of those cuts are just dreamt up. They're not real cuts. But even so, there are cuts there, and that's going to cut into the economy, going to cut into the growth of the economy. And at the same time, these tariffs are going to put up the prices of things. You know, if there's shortages, like in COVID times, the prices of certain things are going to skyrocket. And so we are going to see inflation going high. And this will create a problem because although Trump is trying to bully Fed Chair Powell into cutting rates, he can't cut rates if inflation were climbing. And this is why I think we've seen the scale back of the rate cut expectations. And I wasn't going to start there, but we'll just have a quick look at the Fed Watch tool, where we're at today. I'll just refresh this to see where we're at today. So for the next meeting, the June meeting, expectations are still 91% chance that rates are going to stay on hold. So there's virtually no chance we're going to see a cut in the short term. And even June, if we look forward to the June 18 meeting, it's slipping back pretty much day by day that we're seeing a 57% chance of an actual cut now in June. So the chances are at the moment, it favors a cut in June, but let's just see what happens because, as I say, this number is slipping and we're moving more and more towards actually another hold in June. And if we do see inflation rear its ugly head again, we are definitely going to see, we're not going to see lower interest rates in the near term, which is not going to be good for growth. Trump recognizes that there's now a recession risk. There's now a risk to growth, and that's why he's trying to badger and pressure Powell into cutting rates, because he said we need to cut rates because he's recognized that his tariffs will hit growth hard, will hit people, ordinary people in the pocket hard. And so he's trying to say, well, if we have easier rates, there's going to be more money available, etc. But you can't do that when you've got elevated inflation. So Trump has created himself problems, and they've tried to backtrack, but it's not. Well, I mean, it is, I suppose, being a little bit effective at the moment because the markets stopped plummeting. They were plummeting when his tariffs were first announced. And then when he scaled back and stepped back from the brink, the markets have recovered a little bit. So to try to get a view of where we're going with these markets, I like to look at dollar index, where the dollar is going. So it's quite interesting. I looked at, in fact, what I'll do, I'll compare where the dollar peaked recently. It's not the all-time peak, but the recent peak around 110 for the dollar index was right at the beginning of the year, January 2025, the beginning of this year. And that's really when Trump obviously came into power. And from that time, the dollar has plummeted quite sharply. Now, this is probably something that Trump wants to see. He probably wants to see a weaker dollar. It also means actually it's more expensive for Americans to buy stuff from abroad because they've got a weaker dollar, which is also a bit of a problem, an inflationary problem in itself. But if you have this weak dollar, it means that it's actually easier for America to export. So you can see some points behind what Trump is trying to do, but there's so many negatives around it. it's going to create a lot of pain. But anyway, from the time he came in, we've seen a 5-wave decline, I believe. So we've got a wave 1 down, 2 up, 3 down. The wave 3 went pretty well, almost exactly 2.618 times wave 1. That is a really nice Fibonacci extension. We obviously have the golden ratio 1.618, then very common 2.618, which is a larger extension. So we saw a very powerful move down here in wave 3, then a wave 4 higher, and then clearly a 5-wave move down in wave 5. We can quite clearly see it from this wave 4. You can see 1 down, 2 up, 3 down, 4 up, and 5 down. That's 5 waves within the 5th wave. So I think we've got a very neat 5-wave move down. Now, from that move down, we now will begin to move up in either, this is either the end of a move down, so we can start to move higher in 1, 2, 3, 4, 5, and start to move impulsively higher in the dollar, or it could be that we just see an ABC correction higher. We can't tell as yet, so we need to be watching, just watching the US dollar, see where it goes. It all depends so much on what happens with the news and so on. So at the moment, we appear to have had a wave A or a wave 1 higher. And again, if you can just see, you can see a 1, 2, 3, 4, 5. It's clearly 5 waves higher, and that is a wave A or a wave 1 to the upside. And we've got an ABC down for the wave 2. So we should, whatever happens, we should see some movement higher now in either a wave C or a wave 3. It doesn't matter which way you count it right now. We should be seeing a stronger dollar in the near future. So bear that in mind. From the low in the dollar, we're seeing ABC higher. Now I'll just flip over to euro dollar. I was looking at euro is quite important. There's a big trade war going on between Europe and America, of course. So if we look at that, we just saw basically an ABC down, sorry, higher in dollar index. Now in the euro, we're seeing ABC lower. So the actual inverse, which is exactly what you'd expect. And these are both predictive. Again, we can see 5 waves down, then a choppy 3-wave move higher. And then we should expect to see further movement down in the euro. That will favor the euro in terms of their competitiveness. If we see a slightly weaker euro against the dollar, it will favor the euro. It's not what America will want to be seeing, I guess. So they both correlate perfectly, the expectation with dollar index. But bear in mind, obviously, they're going to be inverse because the euro is the main constituent of the dollar index, of course. So you're going to see a kind of inverse view, but it's just nice to actually see it in practice and see it actually working out. And we can look at pound and we can look at the yen. These are the most important major currencies that we look at. Dollar yen is actually one of the most important. We'll just have a very quick look at dollar yen if I can see it. There we go. So dollar yen has seen some substantial weakness, and that's as we've seen challenges on the market, and we saw the yen strengthening, which means dollar weakness, and that's what we've been seeing. And again, if you think about it, we're about to see a little bit more weakness in the dollar. So that would basically drive basically dollar yen down if we're going to see weakness in the dollar. So again, it's just borne out here. So it all fits together beautifully. So this ABC movement down. Now I'm suspecting that we will see this further movement down in basically dollar weakness, yen strength we see here. So we'll see further dollar weakness for the time being, which is, as I say, what I expected, a bit more. Just flipping back very quickly to the DXY. We expect to see movements up here. So that's actually a bit of DXY. That's a bit of strength in the dollar there. So let's just see again what we expect here. We're expecting most probably, if we see dollar yen, if we see this move up a bit, so this is an A, this is a B, we're expecting a little bit more movement up to give us a little bit more dollar strength there as we move higher. But then we'll see dollar weakness in a big way to the downside, I suspect. So when we see dollar weakness, it could be useful for the market because, as I say, that's actually what Trump wants, is dollar weakness. So I wanted to look as well at going back to dollar index. Sorry for chopping around so much, but I wanted to look at, obviously, we've seen dollar index falling since Trump was inaugurated at the beginning of the year, beginning of 2025. We can see this very clear 5-way move down in the dollar. I just wanted to compare this now with a number of the assets. So if we looked at Bitcoin and just bring that into view, where have we been since the beginning of the year? So Bitcoin actually, although this is a bit deceptive, if you look at where we are now and where we were right at the beginning of the year, around the Trump inauguration, we're actually just about the same level. So actually, Bitcoin has gone nowhere. We saw upward, we've seen downward, we've seen upward again. But actually, Bitcoin is standing roughly where it was at the beginning of the year. So think about that. We've had a lot of dollar weakness, but Bitcoin has held its strength. But if you compare with other cryptos, and this shows you about dominance, the Bitcoin dominance has been soaring recently. So this is Ethereum. Again, if we were to look from the beginning of the year, I'll have to actually bring this into view. We can see that whilst Bitcoin is the same level as it was at the beginning of the year, Ethereum has been falling dramatically since the beginning of the year here. It's just been consistently falling. Now, this tells you a Bitcoin dominance, and it tells you that there's institutional interest. Even though we have an Ethereum ETF now as well, there's been very little interest there. All the interest has really been in Bitcoin from all the buyers. People see it as the safe haven now, the store of value, etc. So Bitcoin is now effectively the safe bet amongst crypto. If you're going to go into crypto, if you're going to dip your toes in, Bitcoin will be the place to be because all the others are seen as more risky. We've seen Bitcoin dominance. So we see here with Ethereum, I updated this chart today, all these consolidations where we see upward movement. It's not sharp upward movement, it's just consolidation. So you see a sharp downward movement and consolidation, downward movement, consolidation, downward movement, consolidation, downward movement, consolidation, downward movement, and we're now in an area of consolidation again. And we would expect to be followed probably by downward movement. This could be, I mean, I've labeled it for the time being as a double zigzag. It could be a double or it could be a very rare triple. It's hard to work out, but either way, it's a correction, I think, to the downside. So I am still hopeful that we do see a major rebound at some point. So at some point, I think that there is going to be some probably a final shakeout with all the worries of the market. We may see shortages on shelves and all sorts of problems. But we've seen Trump's playbook, how he operates. And basically, when he comes to precipice, he backs away completely. And I think he will back away. And I think he'll be desperate not to be seen as the person who sinks the markets. So I do think that at some point when the economy starts to slow and move toward recession, I think we'll see lower interest rates and I think we'll see more QE, quantitative easing, money printing. And this will basically channel money into the markets and it'll push risk assets higher. And actually, I think that is going to be the final massive liquidity push that rallies the markets, Bitcoin and the rest, even Ethereum possibly to new all-time highs. Maybe Ethereum might only challenge the previous all-time high, but a lot of the assets like Bitcoin, I think will rally to new all-time highs, and even Ethereum, as I say, should see a decent rally to at least challenge its previous all-time high. But this will be, I believe, an act of desperation by Trump and their economic managers to try to save the economy from the trouble that's being created right now by the tariffs and by the what I see, in my opinion, as mismanagement of the economy. It's just going to create more and more problems. But to be fair, the problems are already in a mess with the massive debt that America's holding. It's unsustainable. And one of the reasons Trump, of course, wants to have lower rates, not just to stimulate the economy, they've got to refinance a lot of this massive debt that America has. And so you want to refinance at lower rates. And refinancing is coming up. So they want to see lower rates. Trump is desperate to see lower rates so they can refinance much more cheaply. But as I say, these measures that he's put in place, he probably didn't think it through properly. I don't know. I'm sure he must have done. But they're inflationary. And so it means that they can't drop rates. And then when he threatened to sack Jerome Powell, and he basically found out he couldn't sack him, and actually everybody's behind Jerome Powell doing a great job, according to the mandate that's been set for him, then, again, when he threatened to sack him, it caused trouble in the markets. Then he backed away and the markets recovered. So he seems to have these thoughts that go through his head that he blurts out and then realizes, or maybe he's told by people that it's not going to work and he has to back away. So it's not an ideal situation. that was Ethereum. You can look at virtually any of them. I mean, if we look at Solana, which, as you know, is one of my favorite assets, again, from the beginning of the year, we've seen a lot of downward movement. I mean, Solana peaked 295, even the beginning of, right at the beginning of the year, 295. We're currently at 147, so we're less than half. We're 50% of the level it was, despite the move we've had up from 90 something, mid 90s to where we are now at 147. We're still 50% down on where we were at the start of the year. And I've tried to look at the labeling on Solana. And either way, I still believe this is a correction to the downside. So I still believe we're going to see new all-time highs before we see this major crash that I think is coming maybe later this year. So a lot of people have questioned that and said that it's not possible. We can't possibly see all-time highs again. Well, actually, think about it. We've come from 95 or 94 or somewhere around there. I think it was even lower than that, but about 94. We're currently 147. Actually, last week we were at 157. So we're up 50 or 60% from that low point. So it just shows, even on the back of no news, we can actually rally quite a long way. It's not a big stretch to see us rallying to new all-time highs before we see a major crash. And what supports it for me is we've seen these triangles. Triangles are part of a corrective move. So these are corrections to the downside. This first move here is in a wave 2 position. Apparently it's wave 2 or wave B. Well, it can't be wave 2 because you can't have a triangle in wave 2. So it's a wave B. So that tells me we're in a corrective move down. So this is just a large wave 4 down. We're going to get a wave 5 to the upside. So like I said, my strategy is to buy the dips. I'm just looking forward, hopefully, to another dip in the market where I can really fill my bags. And, you know, if we get down below that 90 area on Solana, for example, and looking at other assets like Toncoin and all sorts of assets, I'd be looking to bag up and buy those dips, dollar cost average, buy as much as I can at the low levels in anticipation of a rally to new all-time high. So if you can buy, just say, for example, you can buy at 75 and we move to 300, then you're talking 4x on Solana, which is a great coin, great use case, great liquidity, everything. So 4x on your money in what's probably going to be a short period of time, just maybe a matter of months. And we could see a massive rally. So this is why I am looking to buy dips. But wherever we look across the board, we've seen generally a move down in crypto since the beginning of the year. We will just flip over because I can go through all the cryptos and show the same story, but it's not worth it. But we'll have a look at the SPX, where we're at on SPX. We said yesterday that we had ABC down. I think we're working on ABC higher, and then we're going to get that pushed down. So this, again, is what I expected, really. If we see you know, basically, if we see 3 waves down, 3 waves high, then we'll get a 5-wave move down. But following that, that is all part of a large correction, a 335 flat correction to the downside. Then I think we'll see a push to new all-time high. This is what I'm hoping. And I will be looking to buy dips. If we see a 5-wave push down, I will be looking to buy those dips in anticipation of a move to all-time highs. Once we moved into a decent profit, I would look to protect a guaranteed profit. Now, as I say, in anticipation and hope that we'd reach new all-time highs. But if we didn't, and for some reason, market reversed to the downside, we're protected and we take a profit no matter what. But actually, what my ideal scenario would be is we see this 5-wave push to the downside eventually coming. We'll buy the dips here. I would look to get into a long position, protect it in a guaranteed profit as soon as it moves up, ride it all the way to a new all-time high, protect my position just around the all-time high, but then around that level, I'd look for 5 waves then to the upside from the new down here. Once I've got 5 waves to the upside, I'd then look to be shorting at that point. I don't like shorting the market, but if we do see a clear 5 waves to the upside after this correction, I would then be looking to short the market, again with tight stops, manage your risk accordingly. But I just think there's such great opportunities available, but you just got to be patient. We see market movements, we feel like we're missing out, but the most important thing, as I say, is just be patient, wait for opportunities. I hope we see the dip because it'll be a major buying opportunity. If we don't, an opportunity missed isn't lost money. It's just an opportunity missed. And the market is always full of opportunities. And as I said yesterday, I've got a major opportunity coming our way, which I am going to share with you. I'm going to get involved with it. I'm going to invest in it myself. I've been talking with the founders of the business for some time now. All the tokens will be in the market. The founders don't hold any. There's no dump risk from that perspective. It's going to be a great opportunity. So as soon as I've got all my ducks in a row there, I'll be sharing that opportunity with you. As I say, I'm going to be jumping in. There are no guarantees. It's not advice. It's just an opportunity you might want to have a go at. So I'm going to be sharing that with you. So I think that's a reasonably short one today, but hopefully it's been helpful. I'm still keeping my powder dry for the time being, as I say, and looking forward to some major opportunities coming up. So yeah, look forward to catching up tomorrow. Thanks so much for listening. Thank you, Bruce. Thank you, everybody, and bye for now.
The great Matt Dixon with the Market Watch Report. Always a pleasure. You know, we have world-class analysis by Matt Dixon here every day. Matt's been trading for longer than I've been alive. Well, maybe not that long, but he's been trading a long time. And we do enjoy it. Now, if you listen to what he says, a lot of what he does, and sometimes, like he said, you know, oh, you're thinking, oh, I missed it, or oh, this and that and the other. But as long as you're not losing money, okay, you didn't really, you're okay. And you're not going to catch them all. Okay. And if you don't want to lose money and you always want to make money, I mean, Matt's consistency trading is like off the charts. I mean, the guy just wins and wins and wins. People look at his trading record and they think, oh, this can't be. This can't be, they say. I have as well here, we did an interview with George Ferrato. George Ferrato is joining us in Dubai next week. So it's going to be an amazing event there at the Global Family Office Investment Summit. And we're really looking forward to it. I did an interview with him. I recorded it yesterday. And here it is. He's with KPI Capital. Really interesting what they're doing. They've started a fund now, and they're investing in all kinds of AI projects. He's going to tell us more about it. Check it out. And we are back here. I have with us George, good friend of mine, George. We're doing a series of interviews leading up to the Global Family Office Investment Summit. We're doing this one again. Global Family Office Investment Summit. It's going to be in Dubai at the Mandarin Oriental, May 6th through 7th. And George, of course, who joined us at the last Global Investment Summit there in Miami, is here with us. How are you?
Hey, Bruce. How you doing? Thanks for having me on.
Fantastic. Thanks for coming on. I'll tell you what, we have an exciting week ahead of us heading into Dubai. You know, it's one of those places. My friend was just doing some traveling. He was down in Panama talking about how this and that and the other. And I was like, yeah, but I'll tell you what, where it's all happening is Dubai. I call it the crossroads of the world because you have all the different countries that come in there. And I think it's going to be really great for us. So tell me a little bit about yourself and KPI.
Yeah, absolutely. So definitely very excited to, be able to participate in the Global Family Office Summit in Dubai this time around. As you said, it's the hub, right, of finance right now. And so my name, as you mentioned, is George Fajardo. I am the founder and CEO of KPI Capital Partners and Keystone Energy.
Very good. So now this is taken I know we've been working together for a little bit here, and KPI, we've done some different types of development, like homes and stuff like that. And then this new facet really, it seems more aimed at technology, right? I mean, still building the infrastructure, but talk to me a little bit about that.
Yeah, absolutely. So, it's just basically what we call, the vertical integration, right? Something that's just organically sort of come about. So yeah, our, track record traditionally or historically for the last 10 years. So I've been in the business, backtrack a little bit, I've been in the business for a little over 20 years, since 2002. And, I started all the way from, the funding and financing side of it. Then I actually went to law school and got my JD. And we've been growing ever since. I focus primarily on the private equity side, where we raise capital to fund our various real estate projects. And so within our real estate, we have different verticals that we focus on. We do, as you mentioned, some ground up development, both in the residential and the commercial space. We also, different types of acquisitions, such as multifamily property acquisitions across the country, as well as land acquisitions. And so within that, where I'll give you an example. Right now, we're acquiring a 90-acre site here in Florida, which is an industrial zoned site, right? But through our contacts, one thing led to another. We were actually approached to help with the funding and the acquisition of stranded energy sites, where basically what we're doing is we're identifying sites across the United States and eventually plan to expand globally, where there is opportunity to acquire sites that have what we call stranded energy. And essentially what stranded energy is you have to go a little back in history, where back in the Obama administration and the previous administration to that, there was a lot of incentives to start with really harnessing renewable energy, right? So, wind energy, solar energy, hydro energy, and what's happening is that these days, what we found is that energy alone isn't really enough to support the consumption. Right. The other factor that we have at play when we're saying stranded energy is that there's a lot of natural gas deposits in areas that are so remote that you're looking at 7 to 10 years from a technical standpoint to be able to even connect to the nearest grid, right? And so it's stranded in the sense that the energy's there, but it's years away from being able to connect. And so what we have found is that there's this unique niche in the market where, with all of this data mining and data processing with AI, crypto mining, blockchain, quantum computing, data storage, cloud storage, what's happening is that over the course of the last 30 years, data really was the main commodity, right? The most sought after commodity. And so now, after we've collected all this data for the last 30 years, and we're actually starting to really process it and convert it into AI, as an example, we just simply don't have the power to process, right? And so this is where these data centers come in. The issue is that, one of these data centers alone pretty much requires as much energy as your standard city to power, right? Wow. So they can't really take, a lot of the data centers that are around right now, they're taking away from the nearest grid, right? So like in Dallas and other, primary MSAs, right? Primary cities. And we're now at risk of really starting to, see potential, energy shortages.
Well, that's exactly right. I mean, these data centers are so critical to the AI. They're critical to blockchain and emerging technologies, but the energy demand is projected to grow by 500% by 2030. So how is
it's only 5 years from now?
Yeah. How is KPI Capital and the Keystone Energy addressing the energy crisis? How are you positioning yourself to make this boom and not stall?
Yeah. And so what we've done is we've actually gone out and we've partnered with some of the biggest companies in the sector that are actually coming in and have the capability to basically, take that stranded energy, right, and really, aggregate it all. So where you can have, I'll give you an example, 1,000-acre site is an example where there's natural gas deposits. We have the ability to link some, solar power that's in the area or nearby, and even some solar, and we've aggregated it all, put it all together, and we're able to amount a significant amount of energy in what we're calling a decentralized grid, right? So its own standalone remote decentralized grid where now these hyperscalers, right? The large consumers of power, right? The Oracles, Microsoft, the Amazons of the world, they can come in and actually use that power, right? Build out the data centers and be able to actually use that power. Where a few years ago, they would have thought we were crazy. They would have never gone out to remote areas because they wanted to be near, the population centers, right? The major cities. And now they've realized that there just simply isn't enough power for them to be able to do that. So now they've opened up to coming out and, coming to the more remote areas. And essentially, we're acquiring these sites. We're building out the infrastructure, the substations, and getting it ready for the construction of the data centers, where they can now come in and fill that rack space and use the energy that they need.
Well, it's a national security concern as well. I mean, President Trump's declaration of energy emergency has framed the grid strain as a national security issue. Let's talk a little bit about that. How is KPI in your work supporting U.S. leadership in AI and quantum computing, and why it's critical for our national interest?
Yeah, I mean, we see this as a humanitarian impact, endeavor for us, because you're 100% right. So, back in February, during the address to the nation, President Trump did declare a national energy emergency. And you're 100% correct. He does seize the Trump administration sees this as a national security issue because of the fact that this is the new arms race, right? The energy race when it comes to the AI and quantum computing, where we see China, they're trying to compete. They're actually going out. They're opening new coal mines on a daily basis where they can start to really, generate the amount of power and energy. And so we have to do that as well, because I mean, right now, AI is powering, everything down from, your standard chat GPT on your phone to some large, national security interests in the Pentagon, right? And so we've had conversations with some of these companies that are running very complex AI algorithms essentially to do some very in-depth analysis in the military space, right? In the national defense space as well. And so, I mean, all hands on deck, because again, we are in a big competition globally with other countries, mainly China, who is who's really trying to beat us to the punch.
No doubt about it. So beyond powering the data centers, your work promises job creation, rural economic growth, and alignment, of course, with the federal energy priorities. How do you balance these social and economic impacts with delivering secured, yield-driven opportunities for investors?
Well, so the main thing is that when it comes from an investment standpoint, right, the firms that we're partnered with that are executing the vision in terms of aggregating the power, creating building on the substations, building on the data centers. The main thing is, from an investor standpoint, is that we're already securing the end result, the outcome, right, which is getting what's called a PPA, power purchase agreement, for some of these large hyperscalers that are willing to come in and actually commit to 20 or 30-year, long-term power purchase agreements, where, once that power is in place, we already have a built-in customer base that needs the demand. The demand, I mean, is astronomical, right? And so from an investor standpoint, once we have that secured, I mean, that's the best tenant you can have, right? Is one of these global firms that is AAA rated and will be purchasing this power 24/7 for the next foreseeable future, long term, 20, 30 years. And so that enables us to really offer a very attractive, lucrative returns for our investors.
Amazing. So we'll have to, we're at the end of our time here, so we'll kind of wrap it up. How do people find you? What's the website, social media, and what is your main goal there in Dubai?
So, our main goal is to definitely, make new contacts, new relationships with investors out there that are aligned with our visions and our value, and just be able to continue to grow our fund and really be able to take this to the next level.
Amazing. And it's kpicapital.com. Is that right? KPI?
Yeah, our website is KPI- so the dash capital.com.
KPI-capital.com. George, thanks so much for coming on. It is always a pleasure, and I look forward to seeing you in Dubai.
Likewise.
Cheers.
Hey, Randy, I got another home run for us, man. This 2-bit exchange is absolutely amazing.
Hey, Bruce, what's up, man? Yeah, why don't you tell me about that 2-bit exchange?
Yeah, that's right. And we're going to be able to list our coins that we want, that we support, and they're going to be on this amazing derivatives platform. It's absolutely awesome.
Derivatives? I love derivatives. I can't wait to be on the trade copy program.
So what I want you to do is set up an account and then send me your UID, and let's set you up with a trade copy system, and you just let it run. Copy our trades. That's it. Easy peasy.
So you want me to open an account, send you my user ID, and you hook me up with a trade copy system. I can't wait. Sounds spectacular.
Hey, Matt.
Hey, listen, I met with the guys at 2-bit exchange while I was in Dubai, and this platform really looks amazing.
Yeah, hi Bruce. Yeah, thank you again for that heads up. I mean, I've looked into this 2-bit platform. It does appear to have everything we're looking for.
Yeah, that's right. 2-bit, Toobit. They have great liquidity. They have futures platform. There's a lot of functionality that I think you're gonna like on there. And they really want to work with us. They want to work with the Impact Money Show. And as you and I both know, if they have a good product and they want to work with us, well, hey, that's half the battle.
I mean, basically, I love that copy trade facility. I love the features on the platform. It's basically very simple to use.
Our viewers only need to set it up to copy our trades, and they just do all the trades that we do. Makes it really easy for people to participate. I think they're going to love it. I'm pretty excited about it.
And yeah, it's definitely going to benefit people. I mean, obviously with all the years of experience that we can pack into it, and people can basically benefit from that. Yeah, I definitely think it's a goer.
Hey, David. Yeah, man, I'm excited about it too. I mean, when you think of the ways that we can help our viewers earn money and be able to participate in the monetary revolution, this 2-bit platform just opens up all kinds of doors that they don't have right now.
Hey, Bruce, I'm checking out this platform. It's revolutionary.
That's absolutely correct. And the futures platform is amazing. Great liquidity. And the copy trader program, people are going to be able to make the trades exactly when we make them and make the money that we make. It's a win-win for everybody.
Open for U.S. customers, and you can deposit money with the credit or debit card. Doesn't get better than this.
Beautiful. And what do you think we should use as a referral code?
I think we should use Impact Money. That's the one. Impact Money.